Hello guys, welcome to PlaybookFX. In this video, we'll be discussing top-down analysis. Top-down analysis helps in understanding market direction, and it also helps in identifying higher time frame key levels. If you like this content and you'd like to see more of this often on my channel, please give this video a thumbs up, leave your comment in the comment section, subscribe to the YouTube channel and turn on notification bell so as when I release a new video, you'll be the first to be notified. Without saying too much, let's get right into the video. Top-down analysis basically mean analyzing from higher time frame down to your entry time frame. How I do my top-down analysis basically is I select my time frames and then I assign duties to these time frames. From higher time frame down to the entry time frame, I want to understand what is going on the chart before engaging in any trade. I use weekly or daily for price narrative, and how I do this is I use candlestick formation and I use the concept of internal liquidity to external liquidity to understand price narrative on weekly or daily. I use 4 hour or 1 hour for directional bias. So directional bias is me understanding the market structure on 4 hour, the other flow of price, and I also use the concept of internal liquidity to external liquidity. I then mark out my range on 1 hour and I select my POI. So these are the things I look out for on the hourly time frame. If it is not clear on 1 hour, then I move to 4 hour to understand the chart better, because the lesser the candle, the clearer the chart. So I use 15 minutes or 5 minutes for my entry. So me having this time frame in mind and what I'm looking for on each time frames will make my top-down analysis very easy. Without wasting too much time, let's go to the chart. So I will show you how I analyze the chart on gold. So this is random date. The date here is 13th of February 2023. Looking at weekly, we look at this side. Let's just look at what happened here. Okay, let's zoom out very well and see. So looking at what happened on gold here, we can see that price swept this area on gold when price took out this external on gold, and then price came for this internal here, mitigating this area. Our next expectation for price is for price to come for external, because basically what price does is that price moves from internal liquidity to external liquidity. Price has taken out internal and we're expecting price to come for external. After checking weekly, then I'll move to daily to double check. Looking at what price is doing on daily, price was bearish on daily, we're pushing to the downside, and if you follow mitigation, you notice that price has mitigated this level here. After price mitigate this level here, we'll be expecting price to come back to this zone here for price to continue pushing to the downside. This was the area where the last reaction happened on daily. Still, I'll be expecting price to come for this external here, because price is coming from internal and is going for external. So on 4 hour, said I want to understand structure, what structure is doing on 4 hour. If price is coming for this external, price will not fly to this external. Price is going to form structure to get to this level. And looking at what price was doing from this leg here, this level here to this level here was a range that price was trading inside before price violated it. And when price violated this range here, price gave us some reaction here. Price gave us some reaction here. We had this mitigation here. We had another mitigation here. And when price will fail that level, price reacted to this level here. Price reacted to this level here. And following price again, you see before price took out this high, price swept here. Probably price mitigates somewhere inside here like this. Then we had a break of structure. Then price continue breaking structure to the upside. There is this level here that I will have been expecting price to come back to. What I wanted to understand is that price does not care about your point of interest. Price is only interested in liquidity. Price took out the liquidity here inside this fair value gap, then continue pushing to the upside. We have a low here. For you to have a confirmed range, you need price take out liquidity here, break structure to the upside, and price take out another internal liquidity here like this. So we will have a range from here to here, and we'll be expecting price to come back to this level and continue buying. When price took liquidity here, break structure to the upside, price gave us a low, and when price took this internal liquidity, price gave us a range. So we have a range, price came to the EQ of this range, then continue buying. Now price took out this low, and we had a break of structure here. Another, see, price took out this low again, mitigate here, and then price push to the upside. That's it. Price retrace back again, mitigate here, and price continue pushing to the upside. Swept this low. See, price mitigates somewhere here, then price push to the upside. Now presently we have a range from this low to this high here. We have a range like this, and we'll be expecting price to come for all this liquidity before continue pushing to the upside. Looking at where price is currently reacting to, we have here as where price is currently reacting to, but because I have this as my POI does not mean I will start buying from here. There are things price needs to do before I can engage in this buy. And let's go to like 1 hour and see. Now we understand our range, that this is our range. Now we understand our structure, that price is currently bullish. This is like a retracement for price to mitigate something inside the discount of this range, then continue pushing to the upside. Now if this level fails, I don't think there is anything I can see obviously that price is coming for here, except if price is coming for this POI here. The reason why I have this POI was because this was the zone that filled this supply here, and we have inducement above it. So price is at this zone now. Let's see if price will respect this level, then continue pushing to the upside. Now what do I need to see before engaging in this buy? I need to be extremely patient before I engage. Price is still bearish, even though higher time frame is bullish. That does not mean I will neglect what the lower time frame is doing. Now on lower time frame, what am I seeing on lower time frame? I can see clearly that we had a break of structure here, and presently this is the high. Since we have this as our high, it swept liquidity and it broke structure. Now for me to confirm my range here, now I need price to take out one internal liquidity, and price took it out here. So we have a range from here to here like this. You can see clearly that price has come to the premium of this level, and price again sold to the downside, took out this external liquidity again, and now price is going for internal liquidity. If I'm looking for sell in this situation, because price is currently bearish and I will not want to trade against the trend, even though the higher time frame is telling me buy, I want to know the area that will validate or invalidate my setup. We had mitigation here. After price mitigated this level, another mitigation happened here, and we have another mitigation here again. And looking at it again, we had more mitigation here. This is an area where normally I would be expecting price to come back to, but if you look at it, price has already tagged that zone before pushing to the downside. Price tagged this zone before pushing to the downside, so there is nothing for price to come back and mitigate here except for this one. And the reason why I said this one is because if you look at it very well, you see that we have fair value gap here, and there are liquidity resting below that zone. But the reason why selling from this zone will be low probability is because if you measure our range from here to here, you see that this zone falls inside the discount level, which will be a low probability sell. Instead, I'll be waiting for price to get to the premium before looking for sell. If in this situation, this kind of setup, like I'm on the chart, I will not ignore this zone entirely, even though I know price may not sell from here. This can actually form a flip zone for me to look for a buy. For price to push up inside the premium, then I'll look for sell to continue the move to the downside. If we should look at it very well, when price get to this level, price reacted a little bit to this level, then fill this level. This is a flip zone that price created. This will have been the area where I'll be looking for buying opportunity from. For price to come into this area, then maybe I can now go to higher time frame or lower time frame to look for a POI here, for me to look for sell if possible, even though I'm unable to get a clear POI from here. If I should follow price from here, since price is at the premium already, if I should follow mitigation from here, I will most likely get a zone where I can anticipate price to fail that level and then look for possible sell from there. We should not forget that on higher time frame, we have this zone here that we're expecting price to continue buying from. But to validate that buy, I need price to start giving me buying intent on lower time frame before I engage in that. If price fail this level, does not mean price is now giving me a buying intent. Remember, we have a range from year to year. So after price took out this internal, price did not break this level completely. Price only swept this low and price start pushing to the upside. So price can still come to more premium level. So we still have this range from year to year. This high did not close properly below this swing low. Immediately price take out this low, price started buying. If there is an opportunity for me to look for buy, I can join the buy here for price to come to this premium level. If price should break above this level, that is when I'll be interested in looking for buy in alignment with the higher time frame. But presently, I'll be looking for temporary buy for price to clear out all this liquidity. Price can clear this liquidity and then get to this level and continue selling to the downside. Or if price should fail here, then I'll be looking for buying opportunity in alignment with higher time frame market direction. I can only understand all this if I analyze my chart from the higher time frame. Now, having this kind of information will prepare me for different scenario. That's one of the reasons why top-down analysis is very, very important. Now, let's see what happened. Remember, all year their liquidity, and I'll be expecting price to come for all of this. Let's see. Okay, that was news. That was news. So news came, took out some liquidity here, then took out this low as well. So this is news candle. Let's see what price will do from there. Price took out this low, as manipulation. This is not a break of structure yet. Price has taken out that low eventually. Remember, another scenario I talked about is if price should take out this level here. Now I'll be expecting price to come for all this liquidity. For price to come to this level and maybe look for potential buying opportunity. Now, since price has failed this level, let's see if price will come back to this flip zone. If price should give us an inducement here, let's see what will happen. I'll be very careful about selling from here. But if price should come back to this level that I marked here, I'll still be interested in selling. So let's see. You don't have any reason to force anything. If it is not clear, you do not have any reason to force anything. Let's see if price is going to come to our point of interest, and let's see if we will now get confirmation to enter. Understanding what is going on here, you see that if we go to 1 hour, you will notice that price took out this low after sweeping liquidity here. Price returned to this level and this level failed. Before this level failed, price gave us some reaction before it failed, and this reaction now, if price wants to continue buying, this reaction should hold as the flip zone. If price wants to respect this point of interest, what I'll be expecting price to do is price come to my point of interest, react to this zone, fail, then price continue pushing to the downside. So this will be my confirmation. So let's see what will happen now. Because price took out this high does not mean price has switched bullish, no. So this is just manipulation, and this is what I'll be waiting for price to do. We have a break of structure here. I'm expecting price to hold this level if price wants to continue buying. If price is not going to respect this level and this level fail, probably price will continue selling to the downside. It is not 100% necessary that price should come to my POI, because price does not care about my POI. Price only care about liquidity. This is 15-minute time frame. Let's see if price has already filled this level though. Price has filled this level, but I want it to fill properly. Okay, price has filled that level now. So what will I be looking for now? I'll be expecting price to come back to this zone here. This is my flip zone here. I'm expecting price to come back to this level. It seems like price has already tagged it, but yeah, there's a little bit of space ahead of it. Hopefully I'll be expecting price to come back to this level and look for potential sell for price to continue pushing to the downside. So see, price came back to our entry. Will price continue selling from there? So we have, this will be our entry here like this. Our primary target will be this low. That is how you trade confirmation. Basically, you understand what happened here. Understand that price took out this our demand here, and when the demand failed, supply will take control automatically. So I was expecting price to come back to this level, but I will not just put a zone here, and I'll be expecting price to come and mitigate that zone. Market does not care about this zone. Market only care about liquidity. Now the liquidity price is seeking may be above this high alone, and when price take that liquidity, price will continue selling to the downside. Price swept this first liquidity, push to the downside, swept this liquidity again. Now price is giving us confirmation to enter into a sell. I waited for this flip zone to fail. This high that swept liquidity and break structure, this was the flip zone that took it out. So if price wants to actually continue buying, I think price should respect here. Now since price has already filled this zone that took out this high here, giving us another flip zone here. This reaction here is the inducement. Price came for that inducement, and I'll be expecting price to come for this low. This is a random day, but on a normal day, this is what I look out for before engaging into any trade. This is where we'll be drawing the curtain on today's episode. If you like this content and you'd like to see more, please give this video a thumbs up, subscribe to the YouTube channel and turn on the notification bell, so as to when I release a new video like this, you will be the first to be notified. Thank you, and see you in my next video.